All right, hello and welcome to a brand new show of Deep Dive with me, Nikunj Dalmia. Over the next 30 minutes, it's all about this global risk-off moment. Now, is it tariff or this is a market which in a sense is now puzzled about what is coming next? See, logically, when you see such a large risk-off, it is associated with an event, debt crisis, COVID, or for that matter, 2008 kind of a financial meltdown. Now, we can argue back and say that this is tariff is something which will shake the trade setup in the short term. It will have implications in terms of where the near-term GDP would move. But is it as scary as what we've seen previously when markets have fallen in this kind of a reason? Are recession fears really real? And if US speaks out, what it means for India? Why gold and Bitcoin have fallen in sync with each other? All that and much more with Nilesh Shah of Kotak AMC. Nilesh bhai, always a pleasure to have you back on ET now. ये क्या हो रहा है और ये क्या हो रहा है? Make sense for our viewers.
So, मतलब निकुंज भाई एक हिंदी फिल्म का गाना है, वो प्रोबेबली इसको डिस्क्राइब करता है. ये चांद सा रोशन चेहरा, जुल्फों का रंग सुनहरा, ये झील सी नीली आंखें, कोई राज है इनमें गहरा. तारीफ करूं क्या इसकी जिसने तुम्हें बनाया. तो ये तारीफ क्या करें हम, वो क्या कर रहे हैं, कब करेंगे, कैसे करेंगे, थोड़ा अनप्रिडिक्टेबल है. I think from US point of view, what they are doing is right. You have fiscal deficit ranging at 6 to 7%.
What happens in this song, if you've seen the movie, the hero actually falls in Dal Lake after this.
यहाँ पे हीरो तो शायद नहीं गिरेगा, बाकी सब गिर जाएंगे.
Okay, so let's understand the selling last night, synchronized across the board. It started with US equities, went on to hit silver, crude, bond market, as well as Bitcoin. Why have we seen such a synchronized sell-off last night?
So Nikunj bhai, we see the history of tariff imposition in US, whenever they have put mass tariff, it has resulted into recession. Now, if the world growth is going to slow down because the engine itself is slowing down, undoubtedly all the asset classes will come under pressure.
Okay. Now, we've seen a similar kind of an sell-off during COVID, during 2008. When the selling started, I think in 2008, everyone said, India is safe, subprime is a US problem. And later on, we realized that it was a global problem. I hope we are not there yet, but could we head there?
So, see, one, we have to appreciate that our markets are fairly valued. They are not cheap. And there is a price to be paid for the tariff war unleashed by US. Now, will we become beneficiary or will we become a victim? Today, we have been charged much lower tariff compared to our peer group. So there is an opportunity. Can our government and our entrepreneurs come together to take advantage of this opportunity and really increase our exports to US, create better opportunities and growth over here? That will determine whether our markets eventually go up or not. In the short term, our markets will remain under pressure in line with what happens globally. There is too much of uncertainty. Investors are likely to remain on sideline rather than in the action in the market. And hence, near-term volatility will be there. But the future trend will depend upon whether we are able to capture opportunities provided from this tariff war.
Everybody knew tariff was coming. When US President Donald Trump, he came to power, and everybody knew that he will come out with tariffs. Markets actually rallied. US markets went up, dollar strengthened, flows went back into US, and everything and anything, wherever anybody could gather, it went back into dollar denominated assets. So the first reaction to a possibility of the tariff was great by US markets. Now the tariffs have rolled out, markets are panicking. So why are we seeing two reactions for the same thing?
So, Nikunj bhai, when President Trump talked about correcting America's situation, he was talking about one, fiscal deficit at 6-7% unsustainable, current account deficit running at 3%, 3.5% unsustainable, debt to GDP ratio 125% and climbing, unfunded Medicaid liability. Undoubtedly, US needed to do a course correction. And when he presented ideas that I will use tariff to lower current account deficit, from tariff, whatever revenue I get, plus dodge through which I will cut wasteful expenditure that will help reduce fiscal deficit, it was music to the ears of the market. Finally, someone was talking about doing right things to correct the imbalances which had slipped in American economy. Now, the process of doing this is something which market is not liking. A lot of the negotiations could have happened behind the curtain, below the radar. So it is more about one, the market which is liking the objectives of this process, but unliking the process through which this whole thing is happening.
Now, if I try and put two and two together, which is that we know the ceiling limit for the tariffs. Whatever bilateral negotiations will happen, whatever back channeling will happen, hopefully there would be a middle path. Could that be a trigger for the market? Because we know the worst now, and the final picture would be better than the worst number what we know.
So, Nikunj bhai, again, there are a lot of uncertainties. There are options open on increasing tariff if there is a retaliation, as spoken by several people of the establishment. Second, there is also possibility that through bilateral negotiation under Section 4, we will be able to soften the blow. So today, there is so much of uncertainty that markets will prefer to wait on the sidelines rather than jump in right in the middle.
Okay. How do you see the sequence of events now unfolding? Let's assume that investors are nervous. If investors are nervous, they will sell. If they will sell, where will they go? Because dollar is weakening, which means it makes little sense to go and park money in dollar. US yields are no longer at 5, they are nearing 4 and sub 4 probably, which means yields are no longer attractive. So if somebody is selling any asset class, be it gold, silver, Bitcoin, emerging market equities or US equities, where will that money go?
So, Nikunj bhai, we are assuming that investors will behave with rationality while taking decision. I think we are at a stage where some of the decisions will be taken emotionally. For example, European investors have about 18% ownership of American equity. Now, as the US and European Union relationship comes under pressure, some of the allocations can change, and that will be a political, emotional decision rather than a rational decision. We are going to see so many moving parts whereby decisions will not be rational. It's more likely to be emotional as well. Normally, the history suggests that in time of turbulence, you go to precious metal. Probably that trade will happen. Maybe the world will recognize that there is as much policy uncertainty in developed market as it is in emerging market. Let me go towards emerging market where valuations are cheaper. Today, over last 15, 20 years, emerging market looks much cheaper compared to US market. So we will see a lot of moving parts, which is going to impact decision making, and everything is unlikely to be rational.
There is merit to believe that India will be affected less. Why? Because IT, which is a major exports, that stays firm. Pharma, hopefully logic will prevail that if you impose pharma duty on pharma, that will make American healthcare more expensive. So do you think in this entire tariff war or the tariff rollout, India will be less affected?
So as of today, tariff imposition on India is lower than many of the peer groups. Second, we also have opportunity to do bilateral negotiation with US and soften the blow. Third, as you correctly mentioned, some of our items like IT services and pharma, at least as of today, are outside the ambit of tariffs. So undoubtedly, we are in a better position vis-a-vis rest of the world. But please remember, if the whole pie is shrinking, it doesn't matter whether you get big share or small share. Your overall piece will still be lower than the small piece of a bigger pie. So we really need a stability in US, which is like 25% of global GDP, which impacts growth globally. Unless until there is a stability on global growth, we are unlikely to benefit from a growth point of view as per the expectations of the market.
The selling is intense in IT. The logic is that US government will spend less. The after effect of that would be felt by corporates, banks. BFSI space a mainstay for IT companies that could take a tumble down. Are the concerns in IT justified, or the selling IT justified?
So again, IT is facing both short and medium term headwinds. As you correctly mentioned, tech spending could come under pressure if US growth slows down. There's also worry on technological disruption through artificial intelligence. And we will all be looking forward to the commentary made by IT companies this quarter. There is probably a bottom to the IT stock after this massive correction, where dividend yield could come and support the prices. But for recovery, we need some clarity about future. What's the trend in tech spending? How are they seeing engagement with client? And how are they leveraging artificial intelligence to provide cheaper, better, faster solution to customers?
Okay. राइट नीलेश भाई, थैंक यू वेरी मच फॉर जॉइनिंग अस. शो गाने से चालू करा था, एंड भी उसी से करते हैं.
Thank you.
तो एंड भी गाने से करते हैं अब.
Well, I really think that this is the time to be following the dharma of asset allocation. And finally, किसके रोके रुका है अंधे सवेरा, रात भर का है मेहमा अंधेरा.
क्या बात है नीलेश भाई, आजा मूड में. चलिए, थैंक यू वेरी मच. थैंक यू भाई. लेट्स टेक अ ब्रेक. यू वाचिंग डीप डाइव विथ मी निकुंज डालमिया.